Hey guys, Boris from BK Force. Welcome to the weekly update for the majors for Euro dollar, dollar yen, and pound dollar, November 19th to November 23rd, 2017. Sort of a quiet week in the US, so we're going to talk a little bit about Brexit, I think, because it could be an interesting thematic story as we get into the end of the year, because certainly a lot of things are coming up in December that could have a big impact on UK trade. For us, though, this week is going to be very, very quiet. We have Thanksgiving week in US, which means US capital markets essentially shut down. By Wednesday, it's only the three front days of the week, and even Wednesday itself is actually considered to be the biggest travel day in the US year, and therefore almost nobody really works on Wednesday. So essentially, it's just front 2 days of the week. There's really not much economic data. I'll go through the calendar in just a little bit. What was interesting, though, from past week was we saw the dollar really sell off. This is, I think, a very, very interesting takeaway that despite strong growth, promises from the Fed, yields more or less holding bid, none of that had nearly as big an impact on the dollar as you would have thought. And one of the most telling signs of dollar weakness was the collapse in dollar yen as it took out that very, very important 113 level. So levels really did change quite a lot. First of all, the two most important takeaways on the euro and the pound is that the support held. 1550 held on euro, 130 held in the pound, and that is, of course, a sign of dollar weakness. And then the 113 broke in dollar yen. So all across the board, it was actually a very ominous sign for the dollar. And it suggests, as I talked a lot about last week, that the breakdown in correlations suggests that maybe we're at a point now where the market is not really going to care about yields or rates or anything else, because it's looking past the December rate decision and looking at the fact that the U.S. economy just doesn't seem to have enough oomph for any further continuation of rates. Looking at the calendar, there is not much on the economic risk calendar here as far as data set goes. Durable goods, U of M sentiment. You see it's all front-loaded here. Existing homes on the U.S. side. We will get a little bit of European data end of the week with when U.S. is basically most of North America is off. So we'll get GDP out of Germany, GDP out of UK. Again, none of the stuff of any import, IFO out of Germany, none of the stuff more than a 10-point market moving impact, I think, as far as the economic data goes. So not really anything there on the charts. But when we look at the actual charts, I mean, not anything there on the calendar, but when we look at the charts here, they are much less ambiguous. There is a lot more power here to these charts. As I said, the key thing here is the 1550-16 handle really held bid. Now we're obviously feeling that resistance at the basically, I guess, 1880 level, right? Anywhere between 1850 and 1900 is the resistance point here in the euro. And a break above 1900 really puts the euro right back on the path towards a test of the 120s. Now, I think that whole zone is certainly going to be a lot more challenging, but the fact that we turn around here should not be dismissed. And only a failure below the 1600 would usher in a truly strong dollar trend and a true failure of the euro. So for now, euro has not failed the top yet. The top has not really been made. We still are making a second round towards a challenge of fresh highs of the 120. And unless, as I said, unless the 116 is broken to the downside, you sort of have to buy the euro on the dips all the way through, assuming they're going to make a run towards the 120s. Conversely, the very, very negative break here of the 1300, it sort of really created this quadruple top in the euro, in the dollar yen. And the only thing that sort of stands to support dollar bulls at this point is this 1150 level. To me, this week will be all about how 1150 trades in dollar yen. If we start slicing, if we go towards the 111, that would be a very ominous sign and suggest that we're now in a steep dollar sell-off that could take us all the way to 110 before the end of the year. If we hold above the 1150 for a whole week's worth, then we could probably rebuild, maybe make another effort towards the 114. For now, though, the preponderance of risk is to the downside in dollar yen, upside in euro dollar, and interestingly enough, upside in the pound. Now, the pound, this is what I want to talk about because we sort of have a lot of free time this week because we don't have any major economic data points or political points to address. The Brexit story has gotten a lot more interesting for things that I think few people truly appreciate. I actually tweeted out about this. Let me see if I can find my tweet. There are 3 points that are worth worth following. And by the way, you can follow me on Twitter at FXFlow if you want to, but I warn you ahead of time, I have a potty mouth and I'm center left, so I will offend a lot of people if you want to follow me. But I do comment on currency market quite a lot, so feel free to follow me at FXFlow. So here's the story with Brexit. The Brexit negotiation depends on three things: UK exit bill, how much money UK is going to pay to the EU, the guarantee of EU citizenship rights, and Ireland. Now, Ireland was sort of swept under the rug in the negotiations, but Ireland is actually a very key linchpin in the whole Brexit saga. And the reason why is because it is impossible, when they started to look at this seriously, it is impossible to physically separate Northern Ireland from the rest of Ireland as a non-EU entity. In other words, if you're going to apply EU rules, it has to apply to the whole island of Ireland, which means it has to be applied to Northern Ireland. This, of course, flies in the face of what the center-right DUP wants. And since they are a key coalition partner with Theresa May, they could actually topple her government, trigger an early election. And all of this, ironically enough, all this turmoil and trouble is actually positive pound, because all of it kind of creates the secondary hope that there's going to be no Brexit, because the Brits certainly have no idea how they're going to do Brexit. And if they elect Jeremy Corbyn, he could easily create a second referendum, or perhaps just simply freeze negotiations and say, you know, we're not going to Brexit out by 2019. Either way, there's a way to kind of walk, what they call walk back the cat, an old CIA expression, of trying to figure out how they could unwind this situation. And that is actually super pound positive. So for now, this 130 held, in my opinion, in many ways, on kind of hopes that the whole Brexit issue becomes more and more problematic for Theresa May as we go forward. So that's sort of how the week shapes up. Not a lot of economic data. We could have some front of the week flows, but really it's going to be a very technical week as far as prices go. As I said, the key levels to watch: 1150 in the yen, taking out the 1800, 1850 or really taking out 1900 in euro dollar. That would be very, very bullish. And the pound taking out the 134. Those are the very, very key levels. If we ever reach those levels in this relatively quiet week, that's a very strong signal that the dollar move is to the downside. Wish you guys the best luck, the best trading. Boris, over and out.